Hey everybody, welcome back to another live stream. Before we get into the show, which will begin in a moment, I wanted to let you know that if you have any questions throughout the stream, remember you can always ask them on our website. We have a live chat support ready and able to help you. My team there is available if you have any questions about any of our products, services, or just have a question for fun. Check it out. Link will be down below in the description.
The stream will be starting shortly, but while you wait, you can check out our sponsors 8cap, Forex Tester, and Superfunded. You can find the links to them down in the description below.
Hey everybody, welcome back to another live stream. Before we get into the show, which will begin in a moment, I wanted to let you know that if you have any questions throughout the stream, remember you can always ask them on our website. We have a live chat support ready and able to help you. My team there is available if you have any questions about any of our products, services, or just have a question for fun. Check it out. Link will be down below in the description.
Coming to you live from our studio in Atlanta, Georgia, this is the A1 Trading Daily Show. Whether markets are rising or falling, we're here to keep you up to date with the latest market news. Join us as we trade currencies, commodities, and indices live, Monday through Friday.
Good morning, everybody, and well, I guess it's afternoon. I'm just used to my usual introduction. Good afternoon, everybody. We're getting into today's main event, the big Fed rate decision, as well as the meeting afterwards, which will all be very impactful to the markets. Let me go ahead and just make sure I get everything set up here. We're going to just show Forex Factory for a second, just to talk about, for those of you who are just tuning in, what we've got in store. We've got an amazing show planned for you today. We're going to be covering, of course, the statement, the funds rate, and of course the press conference after. We've got a loaded show here, and again, we are meeting here for the FOMC statement coming out at 2 p.m., which gives us about 30 minutes here to take a look at charts, and of course to bring in our guest here in just a moment. We're going to bring in Chris Pulver, which we are excited to do in just a minute or so here. Just wanted to set up the stream as you guys get rolling in here. We've got 400 people who just joined in already. If you guys are just getting in here, smash that thumbs up button, help to get this word out, help to get the stream on the front page of YouTube here for coverage for the main event. Again, we are expecting an interest rate decision. Right now, consensus is that we get 25 basis points. That is very likely to be the case, but of course, we will have more interestingly commentary to follow, which will be forward-looking, right? Is the Fed going to continue rate hikes, etc.? This event, I want to just offer a warning to people who are in the audience. This event will cause some tremendous volatility, whether you are trading indexes, whether you're trading currencies, whether you're trading futures, whether you're trading commodities. All of them are likely to be very volatile in the next few hours. So I would definitely encourage everyone to proceed with caution. And to remember that nothing on this live stream is meant to be financial advice. I'm not here to manage your money. I've got my own money to deal with. And I would encourage you guys to think the same way. Also, one more announcement here. Before we get into a bunch of charts and stuff, I just wanted to make an announcement that we are doing a giveaway right now. We're going to be giving away $500 in Bitcoin this month. And this is a really simple process. If you'd like to join the $500 Bitcoin giveaway, we're going to be dropping a link right now in the chat to send us a message to join. Here it is. Click this link, chat with us, and ask to be entered into the giveaway for a chance to win the $500 in Bitcoin. That's going to be super fun. It's just a big thank you to you guys. We've really had a growing on YouTube recently. It's been really cool to see. So make sure to join the giveaway if you have not already. Guys, the markets are warming up here. And in just a second, we're going to bring in Mr. Chris Pulver. I just wanted to do a quick commentary on markets that we're going to be focusing on. We're going to touch on several markets here. We're going to get commentary about the interest rate decision. And of course, we've got to bring him in. Mr. Chris Pulver. We'll say hello to Chris. How's it going, Chris?
It's going great, Nick. Thanks for having me. This is going to be a lot of fun today.
Yes, and I'm glad to. We've had Chris is a friend of the channel. You've been on. We did a podcast in the past together. We've been on the trading battle together. So I am excited to be able to jump in and do some charts here together with you, Chris. Today is, of course, a really, really big day for markets. I was mentioning to a companion of mine in the office here, Frank. We were talking a little bit about how I think that this, especially today with the Fed, is really key. Because right now we have mixed opinions. There's banking, regional banks collapsing and fears around that and the economy slowing. But then there's also stubborn inflation. So it's kind of like, what's the Fed going to do? Are they going to continue to press on and rate hike? Or is there going to be sort of a pause and a relief? Do you have any opinions, or are you sort of just watching to wait? What do you think?
No, of course I have opinions.
Please,
we're entering into that decision point where I think the biggest catalyst right now, besides the Fed, is we finally reached that pause point. So I think the optimism is that the Fed rate hike cycle is ending, and today might be the official sign of that ending rate hike cycle, which means we raise rates today by 25 basis points, putting us up to 5.25. We pause for the foreseeable future, and this is what's going to be interesting about Powell's comments today. Is if we pause, according to the CME Fed Watch tool, that pause will go as long as maybe November, December, and then there's possibly some cuts coming later this year. But what has happened in the past, and this is the one thing that makes me somewhat nervous, is if we raise rates with the backdrop of failing banks. I was just reading this before the session. 3 major banks that have failed: Silicon Valley, First Republic, and Signature Bank. Those 3 right there had more in billions of assets. They had more than like all of the bank failures from like 2009 to 2022. So these aren't just little banks. I mean, these are big regional banks that are failing. Now, granted, there's plenty of liquidity in the largest banks in the world. And in fact, this week in my trading rooms, I was talking about if we're going to take any positions on financial stocks or any financial sectors, I would be focused on banks that are too big to fail. Doing anything with fixed income, if you're in the U.S. Treasuries, if you're in money markets or CDs, I would be focused on banks that are too big to fail. Personally, I put money with Wells Fargo, JP Morgan, Goldman Sachs. Those have been my fixed income for Roth IRAs and stuff like that. But I'm not touching, the ONBs, the HBANs, like some of those, just when they've dropped and they reflect that regional bank ETF and they've dropped 30, 40, 50%, don't touch them. I just think it's, that's a falling knife. That's capitulation, that we don't know what the uncertainty is. And so my final point in this topic of today is, of course I'm watching, but is this something where the Fed is going to break? Is the Fed going to break something? And so if they raise rates today in the backdrop of the bank uncertainty, does the Fed kind of break the market down? I mean, the Fed's getting what they want. We have less job openings. We have higher unemployment. Inflation is going down across the board. We've dramatically dropped from 9%. 9.1 was the peak, down to 5 year over year. Our fixed vehicle rates and risk-free rates are essentially 4.5% to 5% now. So we're pretty much on pace with current inflation measurements. And if inflation continues to go down, I mean, that is kind of mission accomplished by the Fed, but I don't think that Powell is going to deliver good news to the market. He never has. He rarely does. And I don't know why he would come out today and be dovish all of a sudden. So, I mean, we can't stoke more inflation by having assets go crazy because they're all excited about the final pause being in. But interesting. If you follow the Market Huddle, that's a good group on YouTube, and they've got a pretty good following on Twitter as well. They just brought in like a basic bull case scenario, bear case scenario, and it's so polarizing. I mean, I don't know, but I do know that the last couple of weeks for me, I've been hedging everything in my portfolio, certainly with stocks and options. And as far as risk on, risk off and currencies, I'm kind of mixed on the dollar. I think that the DXY and the US dollar chart is really going to be the one chart to watch for today to figure out what do we do next. If the dollar gets weak, what do you think? Dollar gets weaker, a lot of stuff moves and benefits from dollar weakness. Dollar gets stronger, we're right back into risk off and safe haven trading, and things get a little uglier and more volatile.
Yeah, I think all amazing points, Chris. And this is, of course, to everyone who's watching, this is why we bring in the heavy guns. We bring in the Chris Pulver, the pulverizer, to come in and talk markets. Chris, great points there. And again, I would agree. The dollar chart is the one to watch because a lot of things, if you're watching anything from yields to gold to currencies, what doesn't matter what you're watching, the dollar chart is going to be the big one there. And I don't want to add to what you were saying. You know, there is a great bull and bear case, which is why I think today's Fed meeting is so important. Is because you do have inflation on, the downside. And to your point, in terms, you touched on it briefly, talked about that potential for forecasts for interest rates to sort of go one more time here and then sort of plateau for a while, and to watch and potentially even see rate cuts going into next year. We've got that data. This is our software that we use to sort of track markets, and it's called the Edge Finder. And again, interest rates, as you're pointing out, inflation is expected to continue to come down. Interest rates are expected to sort of plateau here. And what I think personally, to your point there about that expectation, is today's commentary going to match that? And the final thing you said that I thought was really true about Jerome Powell is that he errs on the side of caution, as most people probably would in his position, right? In that seat, you have to say sort of like, oh, you've got to be careful here. And, we're not seeing what we want to see. You have to sort of be on the cautious side, because if you're optimistic in this stuff and, overly optimistic, the market will hammer you and criticize you like crazy, which he gets anyways. But besides the point, I do think that, interest rates expected to go one more here. The question will be, is the market going to sort of see a pause there? And that is the cues I think that we're going to, the clues that we're going to be looking for here today from commentary. It's pretty much fully expected now that today will probably go 25 basis points, but any surprises there or into the future expectations will be very interesting. And your point about the dollar chart, dollar was trading higher here going into today, but then the last couple of days has really seen some of those gains shrugged off. To your point about regional banks collapsing, fears around that surfacing again going into this Fed meeting. We've also seen gold. I don't know if you have been paying attention to gold at all, Chris. Look at that gold chart breaking above into the almost to the 2030s here going into today's event. A pretty confident move. What are any thoughts on gold? Would you be a buyer on pullbacks? Would you be selling into this? What do you think?
Yeah, so I think that dollar weakness equals a big run in gold, where I think even the 2075 resistance, if you look on the higher time frames, 2075 is breakable. And I think if we get into open space, I think gold can truly, again, it has to be kind of piggybacked on dollar weakness, but if we break 2075, I think there's room to 24 and 2500. I think gold can run, silver can run. I think Bitcoin can have an amazing year if we see just the dollar be kind of the sacrificial asset here in the next, maybe 3 to 6 months. But it all starts now. It all starts today. And, the one thing that we also hadn't mentioned is, yes, we have FOMC today, and there's obviously ramifications over the near term and medium term, but we also have the debt ceiling as soon as June 1. So that combination is very tumultuous for the market to digest that all in a short amount of time. And, it's not going to be easy, right? It's not as easy as, hey, look, the Treasury needs the debt ceiling raised. Come on, Congress. It's going to be a political fiasco and it's going to go to the 11th hour, most likely. I just don't think it's going to be a peaceful resolution. And again, the markets are really what's going to reflect that, with how potentially volatile and maybe reversals are going to be very common. So again, gold runs right up to 2040, 2050. It could reject off that level. We can have some fake out on the DXY charts over the next couple of days. One thing, Nick, in your experience, I mean, when you trade FOMC, do you typically see a 2 p.m. rate decision and then a 2:30 press conference, and the market does the exact same thing for that entire hour? Because usually what I see is the market moves at 2 p.m. and then Powell comes on for his press conference at 2:30, and we have a lot of rebalancing and a lot of short-term liquidity and rebalancing and efficiencies, and then the market just kind of sits at the end of the day where it's closing bell. Wow, what a bunch of volatility, and then you wait for kind of a breakout over the next day or two, and then see if there's any follow through there.
Well, and I think a lot of the newer traders, to your point, Chris, like with the 2 o'clock rate number that comes out, a lot of newer traders might say like, oh, that's going to be it. But really, more experienced traders know that number is pretty much going into it very, very much anticipated to be a certain thing. The only time that 2 o'clock number is going to blast markets away usually is a big surprise, which very, very rare. The Fed has been very much, up to the days before, the market's very, very correct lately in terms of interest rate decisions. It's more that forward guidance where we both have talked about, bull bear cases. The fact that there is such a strong case in both directions makes this market, in my opinion, increasingly volatile. And, you talked a little bit about that debt ceiling situation. And in my opinion, I'm with you on that with the gold concept, because if there's fear around that, if there's conversation, and they almost certainly have to find a way to creatively lift that yet again, because our whole system is built on, debt. We could go into, that's a whole nother, you could do several documentary series on that. There already are many on those. Right. So anyways, in terms of gold commentary, I think that those jitters could cause, especially linked with banking fears. And if the Fed makes any mention of those today, I think gold has a runway, especially if it's able to, break some of these key levels around 2045, 2065. That could take us to, again, to your point, all-time highs potentially on the table there. So gold is an interesting one. You also mentioned Bitcoin. I think, to your point there too, if we get something, any light touch of dovish commentary, even if we just get pauses, even if we just get, hey, we're just going to watch and see from here, I think that gives room to the upside on Bitcoin too. And I'm not a perma bull by any means when it comes to crypto, but I think that scenario where you potentially get out of this just super, super hawkish tightening cycle, that cue could offer some lift off for the crypto space. We'll see if I'm right about that or wrong about that, but should be interesting to see. Outside of what we've talked about already, do you have any other charts you're really paying attention to today? Do you have any trades on?
So I do have some trades. My trading room sessions this morning, basically I am long euro dollar, long pound dollar, and they've been choppy the last couple of weeks since we placed those trades. And I told traders this morning, I'm willing to do a complete stop reverse if I get stopped out. And this would be, so I'm positioned for dollar weakness to continue. I believe in the market seasonality. So this pre-summer push that started where the dollar's been weaker since late February into March, I know that we had this big slide down in the DXY. Now we've gone up recently in the last couple of days, but that was pretty much neutralized. So the path of least resistance recently over the last couple of months have been dollar weakness. So there's two kind of technical ways I see the dollar playing out. If the dollar breaks those fresh lows, we're probably extending lower through the rest of this month. And if again, the dollar could continue to unravel because, we're just going to see assets flowing elsewhere, and Fed pauses, slows down the economy, possibly on the brink of breaking things. Then we have a debt ceiling where you raise it by 1.5 trillion minimum. How can you have a stronger dollar because of that? It just doesn't make a lot of sense. So I'm positioned for dollar weakness right now. But like I said, if we see just a complete flip of risk off trading and the dollar gets bid, then I will flip over and start selling euro dollar. Let me find that position. Euro dollar, my stop is pretty tight on that. I'm looking for, basically my stop is sitting around 109.25, 109.00. And I'll flip that over and try to go short euro dollar back down towards 106 or 105.50. But I
no,
mean,
that
it's going to
makes
be noise
sense.
today. I'm probably going to wait until the end of day to close. I mean, I want to see how the 5 p.m. closes in Forex. But I'm positioned right now, euro dollar long, pound dollar long, and then I'm neutral on Aussie dollar, New Zealand dollar. They have been completely range bound over the last couple of months. We've had fake outs to the upside, fake outs to the downside, no real direction on either side. The dollar CAD is stuck right in the middle between a massive range of 131 to 140. The dollar Swiss, call it what it is. The Swiss franc has just been super strong and resilient. The SNB has been pretty quiet. They're not intervening. They're basically raising rates alongside the ECB, which makes it a pretty attractive safe haven when all of a sudden one of the strongest banking systems in the world is now offering 1.5% yield, possibly up to 2% yield coming in June. So the Swiss has been pretty strong, but that's another basket I'm playing longer term. I'm enjoying some positive swap. I think you and I have talked about this, kind of offline, but a positive swap this year that liquidity providers finally came back in are paying traders, or it's being passed through us. I love the fact that I can hold positions and actually get paid, a couple $100 a week just to hold on to trade.
Yeah,
so
no, and that's yeah,
that's
been it's been an interesting for the carry traders out there. The carry trade is sort of back in business. It was gone during the super ultra low interest rates, but the trade is certainly back and strong, especially on certain pairs like dollar Swiss. Many newer traders in the audience, you guys will be familiar with swaps being deducted from your account overnight. Well, you can actually get paid depending on what you're holding. Of course, you have to take on the risk of holding the pair, but you get paid positive swaps by holding certain things. Definitely recommend looking into that if you're not familiar with what we're talking about. But I think I want to go back to your euro concept here for a second, because very, very interesting pivotal spot. You mentioned the path of least resistance. The dollar's been really weak. I've been on that trade as well. And we've seen that continue to float higher, especially, it's been an unwinding in terms of the fundamentals, an unwinding of that trade that we saw last year where the dollar, the Fed just raising rates every single time aggressively with no end in sight, whereas you had Europe and the UK sort of lagging behind. Now, I want to talk about your pound idea here in a second. Euro going into this will be very interesting to watch, because if this is able to break out, like you said, if we get the dollar to break the lows, that's going to give some headwind to, or some tailwind to the euro and to the pound. If this is able to break, that'll be a big deal, I think, for the bulls, to see if we could stretch out to even 111, that sort of thing could be very, very interesting. And I wanted to add commentary to your pound idea for the pound bulls or bears. It's been really choppy. It's been stuck in a range, but probably for a good reason. We've been waiting for, again, the events today and Friday when we get jobs numbers to play out. One thing I'll add in terms of a positive catalyst, I would say, with the pound specifically, is if we go back to that inflation chart, we mentioned it earlier when Chris was talking about declining inflation in the US. Well, look at the pound for a second and cross that against the US dollar. And you find something very, very interesting in the story between the two central banks. In the US, we are, the fact that we even have, for example, a case to be made for potential pauses here from the Federal Reserve. Well, the UK is not so fortunate. Unfortunately for them, inflation is still stuck above 10%, and the Bank of England is so under pressure to do something about that. So if you think about the two cases here, where one central bank almost certainly has to keep raising rates in order to squash that problem, but the other one is seeing progress, that creates a major divergence between the two currencies, right? What do we have to do in order to raise or in order to shrink inflation? We have to raise interest rates. Well, the UK versus the dollar, I think that gives you plenty of room. And the market's sort of been trading this way, but any continuation of that, in my opinion, path of least resistance on the pound is to the upside, in my opinion, to go along with your pound dollar longs. I like that trade, and we'll be watching to see if we get confirmation, if we get breakouts here to the upside today. I traded, Chris, I traded the S&P 500 earlier this week. This is what I'm personally sort of more interested in or watching myself. I traded the lows here. I actually, context and transparency, I took it long around this area. I got stopped out on my initial trade. but I was able to enter again, and I caught this run up, which was awesome. And then trailed out, took my trade there. So I'm kind of just watching to see how this plays out for equities, for the index, whether you're watching NASDAQ, S&P. What I think will be very interesting today will be to see if we get some fear come into this market, if there's hawkish tones from the Federal Reserve, will that S&P come back down, and will it find a support level here around that 40-70 level, or are we going to actually break through the highs, which I think is also an interesting take. Do you have any thoughts on the indices right now, Chris?
Yeah, so the way that I have been playing indices this entire year is literally January. I started taking some bear call spread stabs at the market, and had some really nice in the money, bear call positions that if May, June is a downward slide, those will pay out really nicely. But for the rest of the year, I thought about, okay, let's get through this pause cycle. Let's get through this debt ceiling. Let's start looking more. My expirations are pushed out towards September, December. I'm not even trying to worry about what's going on right now with bigger positions. I'm pretty neutral. It's a lot of credit spreads. So really, I look at the S&P, the SPY, for example. 415 resistance is pretty obvious. 403 support's pretty obvious. Anything above it, I think there's room and there's legs with both of them. I mean, I think that we break to the upside. There's room to run. The runway might be a little bit shorter. I mean, typically stock volatility goes way down through the summer. There's the old saying, sell them may go away. But I just think that there's this potential melt up where, let me ask you this, Nick. So this conversation I had in my trading room a couple of weeks ago, everyone that was so scared and nervous and uncertain and fearful in 2022, yes, the markets dropped, right? The S&P was down at peak to trough 28%. The NASDAQ's down 37, 38%. I get it. It was a bloodbath. There wasn't a lot of safe places to go. But at the same time, if the normal investor's reaction to that was, I'm going to pull out all my money. I'm no longer going to invest in equities. Let me put it in a 4% treasury. Let me put it in a 5% CD. Well, that's great. But if you just lost 20% of your invested income and now you're going to park it into a 4 to 5% safe vehicle, it's going to take you 8 years to get your money back. So part of the reason I could justify a bullish case is the fear of missing out this would be the perfect year for the markets to melt up, be totally irrational. And everyone just feels like, how does that even happen? How do you even justify the markets going up at all? So I really do think there's a case for the market to be bullish is something as simple as the Fed is pausing. That's why the markets hated everything last year, because it was such an aggressive rate hike path. Now that we've paused, look, the Fed, we didn't step in from First Republic Bank, but there was a round of QE through Silicon Valley. Right. This bank contagion, I think, will be somewhat contained. I don't think this is the GFC all over again, or the Great Financial Crisis. I think this is going to be, bank by bank might have some trouble, but I don't think that the system as a whole is going to be systemic risk.
I think I agree.
I
agree. And
I'm literally directionally neutral. I could go either way, but what I was hoping for today is that we'll just have some directional clarity. I'd like to look at a chart and say, this is where I think we should go, as opposed to, I don't know, but I'll position for both. That's where I'm at.
Well, and I think, Chris, to your point, you made a really interesting point there in terms of market sentiment. Market sentiment is so bearish when it comes to, and when we turn the year, so much bearishness on the indices, but also bullishness on the dollar. That was sort of the consensus, and a lot of people went into fixed income, CDs, all those sort of things. And I think you're right. There may be some of that as well. Well, it also is visible when we take a look at retail sentiment. So what this is, Chris, and for those of you guys who are watching, this is client positioning from a few major brokerages consolidated. And what we can see here is that when we pull up the indices from some of these Forex brokers, we see really heavy short sort of preference. And these guys, as we know, Chris, unfortunately, most traders, they lose money. So if we see that the average guy, the average Joe, is super bearish on indices, is there an argument for, hey, there could be a total melt up that just wipes the floor with these. And actually, too, one thing that's kind of interesting is a lot of hedge funds are also oriented this way as well. They're very bearish on the indices, and we'll see if there's a surprise there. But I think that this is maybe more notable. It's just that the general public and many of the people who put their money with funds and mutual funds and all those sort of things are super bearish on the markets. And I think that actually creates a potential FOMO run if things start to get good. And any sign of, hey, we're pausing, I think could trigger that as well. Another thing, if I'm just being a Super Bowl for a second, is that, people have been calling for stock earnings to be horrible for the last year. They've been saying, hey, it needs to be terrible, or you're going to have an earnings recession. Stocks and companies are going to do terrible, which granted, they still could have, and many things are pointing towards some not great forward earnings and expectancy for slow down. But we're not seeing a drastic, terrible situation for stock earnings this earnings quarter. So will be interesting to see. But I would say that in itself gives me a slight bullish bias. But again, we're going to get probably, like you said, more confirmation from the Fed today in terms of maybe a directional bias. Guys, I mentioned this earlier. I just want to rerun back to it for anybody who missed the announcement. We're doing a $500 Bitcoin giveaway here today. If you are not already entered, it's real easy to join the giveaway. We're dropping a link in the chat as we speak. We got a couple people on the producer side who are putting together this link for you. Click this link, chat with us, and enter the giveaway that way. So right here, you can see it. Just click that, and it will open up a chat and just ask them about the Bitcoin giveaway that we are doing. Guys, we've got about 1 minute here before we get the interest rate decision. Again, Chris, you're not expecting any surprises, are you? Probably just 25 basis points, as most
25 basis points. The big surprise would be no rate hike. I think that would send the market ripping to the upside. Again, still contained somewhat because of the debt ceiling debate, but I feel like the pause would be the Fed acknowledging, hey, look, we've got some systemic things on the rise. Let's make sure we're not making it worse. But I don't think that's the Fed. I think the Fed is, we're going to squash this inflation stuff like we've talked about. We're going to stick to the script. It's, the CME Fed Watch tool, as much as it's changed coming into those Fed meetings, that has been pretty accurate. There hasn't been a lot of surprises from the Fed the last couple of years. I think this is like the 10th straight rate hike. So yeah, it's going to be pretty intense. And again, 25 basis points, the market's ready for, but we're kind of tapering off. If this is the pause, I think what I'm looking for is this, pause for longer, or is there, I don't think there's any hint that Powell's going to say rate cuts are coming, because the last.
Yep. Sorry there. And you're right. Right into the news. And there it is. 25 basis points.
As expected.
As expected. What were you saying, Chris? Didn't mean to cut you off there.
Well, no, that's okay. I just think that Powell is in a situation where it's a lose-lose for him pretty much every meeting. So he tends to stick to the script. So it's very calculated. And this is part of the problem, is the market is so hungry for transparency that it just gets all these little crumbs throughout the months that we, the time we wait from one Fed meeting to the next. And again, I mean, here we are, I'm literally watching price action, everything's moving, and, dollar weakness is pretty prominent. We've had some big jumps already. Let me check and see some of the prices. I mean, not a ton. I'm seeing like 15, 20 pips across the board on some of these dollar pairs. Index
got
wise,
gold jumping here.
Going up a little bit. Yeah. What's gold doing? Probably popping up a little bit. Okay.
Gold jumped to 2030. S&P just shot up here a little bit, but then erased those gains right away. And again, Chris, we have to give acknowledgement to what you said. Remember that usually we see, when it comes to these rates, this was all expected. So you're going to get some knee-jerk reactions, but be very, very careful. Many traders right now are throwing buy stops and sell stops on both sides of price and thinking that, that the 1 in a million traders are going to go crazy when we get something unexpected. But right now we're seeing pretty much as expected a reaction, sort of just a knee jerk. The real interest will be later on here today when we get into the meetings. Let's take a look at your dollar ideas. Euro jumping for you there. That's nice. Little trying to break here. We'll see if that's able to fall through and break out here today for you.
Yep. Pound dollar, same thing. I mean, I'm thinking my original position is just around 2,500. So they're both up. It's just a matter of, the stop loss is safe. I think, as long as we close near the highs, stay up to those highs, I'll sit and hold. I think the breakout I'm watching, I've got dollar Swiss hitting fresh lows right now. Dollar index, I mean, still has room to drop. I'm looking at the DXY lows around 1. I mean, there's some even closes right at 100.86 or 100.85. So I've got chart alarms all over the place, Nick. And, that's really what I'm just going to pay attention to is I'll trade some short-term stuff. Looks like we have some follow-through immediately. And this FOMC stuff is kind of 2 phases of the trade. If you're trading short-term, now until 229, if you can get a window to carve out some pips, that's a good one to be protective of. A lot of times when I do these live events like this and we can do a basket trade and grab, 75 to 100 pips, we typically close it and then look for some structure to maybe fill those inefficiencies with the press conference or maybe get some follow through and see if the dollar flows through the rest of the day.
Yeah, very interesting too. We've got the dollar yen and we've got the pound yen, the euro yen, some of the yen crosses here, especially dollar yen, of course, in focus here today, nosediving off of its tops. I mean, this is a really crazy move. That's 295 pips in just 2 days or so here from the highs, launched there and then gave it all back, following some of the jobs numbers or the job postings numbers being low. And then now today so far. And again, we have to be careful here because volatility is expected to be high for probably the remainder of the day here. So this could be just a quick reaction here, or it could go much further. It could go the other way. We don't know as we're just getting the first reaction. Here's that dollar chart that you were talking about, trying to break here through the lows, 101.33, let's call it, trying to break. Looks like it may want to come down and test that level that you mentioned, 100.85. Will be really interesting to watch that. And then I just want to take a quick look at the indices as well. NASDAQ 100, of course, jumped on an initial, now giving back some of those gains. I would imagine the S&P is following suit. Weird, Chris, here that we're getting the dollar to come down real hard, and the indices are not liking that either. They're not necessarily jumping to the moon off of that. And that's been true of this entire week, right? Jobs postings down, that hurt the dollar, but it also hurt the stock market as investors sort of fearful in regards to company's ability to make money going forward. That's kind of an interesting reaction there.
Yeah, and also, I mean, I do wonder, what we've seen with earnings season so far. And I think this week we had like 1,100 companies reporting earnings, so there's certainly a fair share out there. But what's interesting is, Q4, a lot of the earnings were, hey, earnings are okay. We didn't really have this massive earnings compression like we expected, but forward guidance was very conservative. And we fast forward to just recently, earnings have been okay, and the guidance is kind of better. So, I mean, I think there's a little bit more optimism. I think the reality is that, tech is cutting jobs. If that gets into manufacturing, I do wonder, and I still go back to just everything that happened during COVID in 2020. I think that this has accelerated the move towards automation. I know, everyone knows what Chat GPT is now. Everyone knows what AI is now. And it's still like tip of the iceberg, and who knows how robust it becomes. But I think the reality is if companies are going to make money, they're going to find a way to replace people in some way, shape, or form. So
no,
moving forward, like if it's bottom line investing, look, if the company makes money and they have a competitive advantage and they have limited debt. I mean, that's one thing I thought was really interesting with some blue chip companies like AT&T and Intel. I mean, they're debt ridden, massive companies, and at borrowing rates and financing rates as high as they are, that is a huge concern moving forward. So I think that, the housing market, I mean, at 6 and 7% closing on a 30-year mortgage, that's brutal right now. If you're buying cars, prices are going up, borrowing is going up. People are stretching themselves very thin right now as a consumer. And I just think, like, consumer-wise, we're 70% GDP consumer. So how is that sustainable when you spend more than what you make and you're not saving any money? I just think the consumer is going to crack at some point. So, again, what did we talk about earlier? There's a bull case, there's a bear case. I think the bull case this year, Nick, is more irrational than it is rational. If we go up, it's a melt up. It's what the market already priced in ahead of itself. This is a forward-thinking mechanism. So if the market goes up, it's because we priced in all the bad stuff last year.
Exactly. Yep. And especially when we talk about forward guidance, the clearest way, and part of the reason why this event usually is so big, is when you get commentary from the Fed, who sets the monetary policy. If they show any signs of what they're sort of thinking for the future, that's where the markets get really, really interested. Some people in the chat are saying, be careful, this this sort of false move, the fake break is what people are calling some of this moves. Again, guys, we said it earlier. It could be a real break, could be a false break. The point is the 25 basis point hike was completely expected. To Chris's point that we just talked about, the market was already expecting 25 basis points. This is as expected. It's like if, you know, your mom said she's going to be home at 7 o'clock and she shows up at 7 o'clock. It's not big news. But if your mom doesn't make it until 11:30, you might be a little bit more worried, right? So that's what we're talking about here when we talk about surprises versus as expected. Gold traded up to about 2036 here before giving back some of those gains. Probably, as Chris made a point here earlier, he talked about, you know, trading from that 2 o'clock to 229 range. If there's profits that come on the screen, you got to be very careful that you don't let them slip away from you, considering you know, so many reversals are going to be very prevalent here during this period of time. So be very, very careful to those of you guys who are watching the charts here today. So yeah, I think it will be interesting to watch to see if there's any fall through. Look at that dollar chart, finding a little bit of a bottom, it seems like, for now, struggling to break that 101.3 level that we talked so keenly about here moments ago. We'll see if how this decides to close. This is if we take a look at the 1 hour chart, of course, we've got plenty of time left on this. This will be interesting to watch following the commentary here in just like 20 minutes or so. So that will be very, very interesting. Guys, I also want to just take a quick second to thank Chris. Thank you for coming on the show today. It was awesome to have you here, to have your commentary. I'm sure many people are more informed now than they were before. So I just want to shout out Chris, and also we'll drop a link to his channel in the chat right now. You guys make sure to go follow him, go subscribe to him on socials. It's worth the follow. You know, when I bring somebody on, it's because I admire and acknowledge their commentary and their professionalism. So Chris, thank you for coming on today. We're going to keep going here with the show, but we'll respect your time, and thank you for coming on today.
Yeah, thanks, Nick. Thanks for having me anytime. I'm happy to help. This is all great stuff. You do an awesome work with A1, and I love the software too. We need to talk more about that.
Yeah, thanks we'll get you a copy for sure. Chris, thank you for coming on, and we'll do it again sometime soon.
All right, sounds good. Thanks.
All right, see ya. Yeah, guys, what a reaction, right? So we had, to Chris's point, I thought that was a really important thing that he said about the nature of these sort of spikes to sort of just go one way and go the other. This is why I didn't get, you know, overly optimistic when we see the spikes, because we've still got the bulk of it ahead of us. In the next few minutes, I think we might have, I'm not sure if Ivan is going to be joining us or not, but I know Frank is likely to join us here on the call to see if we have anything. Just subscribe to Chris, said Lisa. Yeah, you guys make sure you go all subscribe to Chris. I'm telling you, Chris is an awesome guy. He's a super smart trader. I've had the honor of interviewing him before. In terms of the people I look forward to having on, Chris is up there for sure. He's got his own show during the mornings. That's why we couldn't have him more often, but maybe for future events like this, we can have him on a regular. So we're at 929 people at this point. Earlier, we were at 1,150 people. If you guys are enjoying the show, hit that thumbs up button, subscribe, and let's push on, see if we can find some more commentary going into the event. Guys, 1 second. Also, remember, we are doing our Bitcoin giveaway. If you guys are not already in the giveaway, click this link. Just got dropped in the chat again here in just a second. Click this link right there. It's going to take you to a live chat feature. My team here is on standby. We're going to be doing a $500 crypto giveaway. We're giving away $500 in Bitcoin. If you have not already joined the giveaway, all you have to do to join for a chance to win that $500 is send us a direct message on our live chat and ask them about the giveaway, or tell them that you want to join the giveaway, so on and so forth. Look at this S&P giving back all those gains. I'm not going to lie. If I'm being really selfish here, guys, if I'm being really selfish and honest, I want the S&P to go down. Even though I'm a bull on it, I want it to go down because I'm not in it. Now, if it shoots off to the moon without me, will I feel some of that FOMO that Chris and I talked about? Yeah, I will. But it'll be okay. But I'm interested in this thing long. I told you guys earlier on, I bragged a little bit about my trade that went well. clarity, context, I took a trade, did not go well, stopped out here, but was able to re-enter here, rode this thing on up, and trailed out of my trade here. Inside of the Discord channel, I shared all of those updates. Of course, you guys know we share all of our commentary and trades inside of the Discord channel. This is what that looks like. So you can see I trailed out of that trade. I trade on Webull, so I was trading SPY and traded SPY long, caught that entry pretty good there, ran up without me or ran on, held on to it, and then stopped me out, trailed me out, and then fell off without me, which was nice. A good feeling when you stop out just in time. If you've ever experienced that, you know that's possibly one of the greater experiences of being in the trading game. We've got here in about, I guess, less than 20 minutes now, we've got the big moment here, what we really are looking forward to. Let's go ahead and bring in Frank and see what's going on with Mr. Frank here. What's going on, Frank?
Hey, how's it going?
Hey, so were you listening at all to Chris and I's conversation?
I didn't catch most of it, no.
Well, Chris made the point, much to the same that you and I were talking about earlier today. We were talking a little bit about, the bull bear case on this situation with the Fed, right? There's a case to be made for both a more dovish sounding Fed and a more hawkish sounding Fed. If you're talking hawkish sounding Fed, you're alluding to the fact that inflation, leading inflation indicators are still sort of stubborn. You've got, that sort of side of the coin. And then also on the other end, you've got bank failures being a concern. And then, of course, also inflation sort of on the come down. How much more do they need to raise? That's all up in the air. Where are you leaning? Do you have a lean in terms of where you think the Fed? I know we're sort of throwing darts right in front of a train, but any thoughts there?
Yeah, so I think what they're really concerned about is like that sticky inflation is the metric that's not really, it hasn't really budged in a while, but inflation overall CPI versus sticky CPI is not moving generally in the same direction. So I think what it might come down to is just, I don't know how the Fed has been this whole time. They've said, they're not going to stop. Even if there's a mild recession, they're not really, they are concerned for the economy, but their priorities lean more towards inflation right now. And a lot of people think that the Fed's going to cut and pause going forward. And they might pause for some time, but I don't think that they're going to stop with what they're doing. They want to keep the course and actually follow through with what they said they were going to do, and that's take it down to 2%.
Yeah. There's a lot of forces at play, and I think that in terms of that sticky inflation that we're talking about, we're still seeing, we saw PMI numbers. We've seen, some of those numbers that have come out have shown that there's still evidence for strong levels of inflation. Unemployment we've seen layoffs increasing. We've seen job openings decreasing. So we are seeing some of the things that the Federal Reserve wants to see. The question is it going to be enough? And the only way we're really going to get an answer to that is, this press conference that we have going on at 2:30. So will be very interesting to see. We'll bring in Ivan here. He is also on standby. Get the trio going. What's going on, Ivan? How's it going, man?
It's going all right. Can't complain.
Very good. It's good to have you guys both back with us. The regular trio back in action. Ivan, what are you watching here today? Any trades? Are you going all in on the VIX before the Fed meeting? What are you looking at?
I'm looking out for Frank's mishaps. That's what I'm looking forward to.
Ah, okay. No cussing today, Frank. We're I want to be the one to cuss.
Yeah, made sure I was looking at the screen before.
What am I looking at? Nothing. I'm looking at euro, of course. Just going to share my screen. But not really fantastic. Dollar did fall on the news, but it's really pulling back now. So, of course, it was too high to buy earlier, and I didn't buy 109.50, give or take. So I'm just waiting for pullbacks or something that is not says resistance, or you're buying too high and you look like an idiot kind of a trade.
Sure. So Ivan, I told this to Frank, I'm going to a gold and silver coin collectors show this weekend. So I'm thinking about, hey, I might buy some collectible silver just for fun. And I'm really hoping that the gold and silver price just drops off a cliff before then so that I can buy some for cheaper. So that's where I'm at personally. It's a different trade than usual. It's gonna be a physical purchase, but I don't know. I'm just throwing that out there. But any thoughts? You mentioned the euro. Are you looking to? You don't have any trades on the euro, do you, or do you?
Euro New Zealand's still in it. That's the only euro trade I have. It's not a euro dollar trade.
Okay.
I'm just gonna take away everything that I have written down. But yeah, so if it makes a new higher high above 177.50, I'm buying again.
Okay. Okay. So you're looking at Euro New Zealand, which of course, the crazy thing is, guys, all charts will move on this event. It's crazy. You could pick the most random chart and it still would react in some ways to what the Federal Reserve has. Just goes to show the notion that the impact that it does have on global markets. I'm looking at the euro here right now, and I want to ask Frank on this in a second, because I know him and I have talked a little bit about the euro dollar, the pound dollar, and the dollar itself. The euro here trading around previous highs, just made a retreat back, took some profits, it seems like, and just sitting ahead of the meeting right around 1.1065. Frank, if we get something super dovish today, if we see, hey, what would cause that? Well, maybe commentary from the Fed, from Jerome Powell, maybe like a nod, a concern to banking, crisis stuff. If that happens, are you a buyer of the euro dollar, or are you, still just too neutral to take a position on that? What do you think?
Yeah, so naturally in a dovish environment, I'm gonna be long euro.
Mm-hmm.
I also have been tracking the past couple of weeks on the COT activity, and institutions are just really buying up the euro currency, and at the same time when we're tracking that, looking at yen shorts too. So I have euro yen on my watch list, but so far I've been waiting on that pullback, which hasn't really completed. It seems to be kind of up and down, but just watching euro yen and euro in general.
So walk us through that. You're talking about the smart money stuff. Walk us through euro. You mentioned yen. What's your concept there? So you're talking about smart money positioning. Walk us through that a little bit.
So not only are they on the opposite ends of the spectrum, but if you scroll down, euro's getting bought up heavily on the weekly changes, and the yen is, I still believe it's the most heavily shorted, and they're continuing to short on the institutional side. So
so to add visuals to what you're saying there. So we're looking at the Japanese yen in terms of long and short contracts here from the COT data that we have. What we could see is that there's been a big increase, a continuous increase in shorts on the Japanese yen. And we've seen an even further contraction on the number of long contracts open on the Japanese yen. So, and then of course, to your point about the euro, just to add visuals to what you were saying, you have long contracts continue to fly higher, and then the short contracts continue to contract. So very interesting to not only see that divergence, Frank, but to see it actually widening here in the latest filing here from COT data.
Yeah, that's what was kind of promising about it. And who knows, the move might have already happened. It's already going up on that 4-hour time frame. It looks like it didn't want to come down to that. What was that? 148.6 something, that kind of level, or that supportive trend line. It might have already made that adjustment once we saw that Fed hike.
Yeah, and Chandler, would you switch us over to Frank's screen? Let's see what he's talking about in terms of technicals. So you're talking euro yen, Frank. Say that again, because now we can see your screen.
So I was looking for a pullback to this zone around 148.63. or even this trend line it's been like a month or so long trend line, which is pretty strong to the upside. This pullback was pretty considerable, but it didn't look like it was over until recently. So it's kind of hovering in a zone where I'm not sure if I want to get in or not yet, but we'll see. The move could continue all the way back up to the highs of whatever that day was yesterday.
Definitely tempting. I'm personally, I'm going to be hesitant there on the yen crosses. I do like them long, but I'm going to be try and be stubborn here, or wait a little bit more for a pullback. We'll see if we can get that. I want to go to Ivan on that. Ivan, yen pairs coming off their highs. Any thoughts there on any yen pairs? I know you love your NZD pair, but I'm curious. Do you have a favorite on the yen side?
Yeah, why not? Maybe a euro yen. Well, love euro on the strength, so that would be the most obvious play that I have. If I'm gonna be a bit different, I would maybe say pound yen.
Okay.
It came down to central pair for me, but also it's another one that's strong. It has 10.1 inflation, so it has all the reasons to go higher. So those two are my my little puppies.
Yeah, no, and little puppies indeed. Not so little anymore though. They're all grown up. They're going crazy these days. The volatility is so high. That pound yen trading off of the highs came down like 300 pips in a day and a half. It's absolutely crazy to see it.
Yeah, it's 15.
Yeah, just wild there. So pound yen. Give us an entry point, Ivan. What do you think? Are you waiting for a deeper retracement, or are you interested around current levels?
I'm interested in current levels, even though 168 looks like a place that actually have support. As long as it makes a higher high and a higher low, I can use this as my stop loss, the current low of 169.
Yeah. Well, and
I
was just going to say, to both of you guys' points with the yen pairs, I'm saying I like the idea of a deeper retracement. It's not necessarily the better play, because to be fair, there's a good fundamental catalyst, and I think we're on the same page with that for both euro yen, pound yen. And if you wait to try and catch a pullback, you might completely miss the move. As long as you're managing your risk, keeping position sizes, small and reasonable, I don't hate the idea of being long either pound yen or euro yen. Ivan, what else are you watching? Any other?
Are you a pound yen hater?
No, I'm not a pound yen hater. I'm more on the bull side myself as well, but I only if we get a deeper retracement. That's my if.
Ivan, your facial expressions kill me sometimes.
That's why I'm here. What was the question again?
He was just not looking. Like, you got a pound yen hater?
See, this is why we bring on Ivan. He has a following. He has, plenty of love in the chat. People love a good Ivan laugh. That's my favorite thing, Ivan, is your laugh is contagious. It's hilarious. So what's next? What are you guys thinking on metals? Gold. Frank, what do you think? Gold today. Any chance we see a bigger break higher, or is the top in for the day?
It on the 4-hour chart, it doesn't look very bullish. It looks like it had topped out, but with this meeting going on, I can't really tell you, because I'm also not listening in right now. I'm not getting the details as they come in, but that, just looking at the 4-hour right now, looks like it might have reached a top for the day, but we'll see. I'm still bullish. Longer term, I think I can see like gold testing in the 2060s, or maybe even higher, back where there was like a double top from the past several years. But in the short term, I thought it'd probably come down to under the 1950s, and maybe even on that long-term trend line that's been there since November of 2022. So something like that, and still a potential head and shoulders pattern in the works. it's really confusing to look at right now. So gold and metals in general are just kind of off my radar for the time being.
Sure. And we talked a little bit about your concern with the Fed stuff. Do you have any thoughts on indices? Indices, are you bullish, bearish, neutral? What do you think?
You know, I'm not going to say anything because it goes either way. I would probably lean more towards neutral. In the meantime, we're going to see crazy price swings. I don't know what the Fed's saying right now. I'm sure that, you know, they're still looking at inflation as like their main priority. But, you know, if they say anything dovish about the banks, if they want to do anything like step in there, or if they want to, you know, start halting for the short term and maybe looking towards another hike later on down the road, you know, it's a different kind of outlook than if they're going to say, you know, we're going to keep hiking and we're going to focus on inflation. We are okay with a recession. So those key things are what I'm going to look out for. And that kind of depends on what they say today. So I'm not going to throw out any opinions whatsoever on the indices right now.
And what would they have to say to get you to be bullish? What would like prompt you to swing that way? What things would you be looking for?
If this is the last hike they're going to do for a while, or the last hike in general, then I'm going to be bullish. Right
Sure.
now, you know, we don't know for sure. So the sentiment around it, the market for a while thought that they were going to come to a halt after this one, but the Fed has also never really said anything like that. So something that you don't want to do is fight the Fed. So even if the market's trying to bid us higher, do you really want to go against what the Fed's telling us?
Sure. That's a good point. Ivan, what do you think on indices? Neutral? Are you a buyer? Are you a seller? What's your thoughts there?
If we can get a what do you call it, a pause, that would make this one go higher, regardless of seasonality or whatever you might think, unless you have a banking crisis that would escalate. But yeah, a peak would set fire to the stock market.
Yeah, and you know, I guess to Frank's point too, and I think this is worthy to mention. I'm admittedly more on the bullish camp, but I think to the point about Frank saying, you know, being neutral, inflation is still, and they've said it. We're all probably shell shocked from the last 2022, you know, year of Jerome Powell saying over and over, well, first inflation is transitory, yada yada yada, and then eventually sitting and staying and saying over and over, you know, we're gonna, until inflation is our number one concern, we're going to continue to rate hike until this goes away, and that gave the dollar such a runway. I think that you know, there's rumors that that story is going to crack, but to Frank's point, fighting the Fed is a really tough thing to do. So until we see proof, I don't necessarily care to be the first one to the party in terms of trying to call the Fed pivot, but more so maybe just looking for momentum plays. So if we do see something incredibly dovish, I'd be interested in seeing if we can break through the highs. That would be a real true signal, I would say, that, you know, this market has potential to rip higher. This is a daily level. We're looking at the 4-hour chart, but it is indeed another key spot on the daily chart that we've been watching around that 41.75 level. Let's call it. We'll just see if that can break. But then again, in terms of the hawkish side, if they do come out and reinforce their position of we're okay with a mild recession, and that's the way they want to phrase it, and this thing starts to break, you know, day traders might get a hold of this thing on a break of this 41.20 level. They could look at to go lower. And, you know, in that situation, I think it's not out of the question to retest levels like 40.70. So we've got commentary starting here. Ivan, do you want to take the screen here? We could observe it together.
Broadly improved since early March. The U.S. banking system is sound and resilient. We will continue to monitor conditions in the sector. We're committed to learning the right lessons from this episode, and will work to prevent events like these from happening again. As a first step in that process, last week we released Vice Chair for Supervision Barr's review of the Federal Reserve's supervision and regulation of Silicon Valley Bank. The review's findings underscore the need to address our rules and supervisory practices to make for a stronger and more resilient banking system, and I'm confident that we will do so. From the perspective of monetary policy, our focus remains squarely on our dual mandate to promote maximum employment and stable prices for the American people. My colleagues and I understand the hardship that high inflation is causing, and we remain strongly committed to bringing inflation back down to our 2% goal. Price stability is the responsibility of the Federal Reserve. Without price stability, the economy does not work for anyone. In particular, without price stability, we will not achieve a sustained period of strong labor market conditions that benefit all. Today, the FOMC raised its policy interest rate by 1/4 percentage point. Since early last year, we've raised interest rates by a total of 5 percentage points in order to attain a stance of monetary policy that is sufficiently restrictive to return inflation to 2% over time. We are also continuing to reduce our securities holdings. Looking ahead, we'll take a data-dependent approach in determining the extent to which additional policy firming may be appropriate. I will have more to say about today's monetary policy actions after briefly reviewing economic developments. The U.S. economy slowed significantly last year, with real GDP rising at a below-trend pace of 0.9%. The pace of economic growth in the first quarter of this year continued to be modest at 1.1%, despite a pickup in consumer spending. Activity in the housing sector remains weak, largely reflecting higher mortgage rates. Higher interest rates and slower output growth also appear to be weighing on business fixed investment. The labor market remains very tight. Over the first 3 months of the year, job gains averaged 345,000 jobs per month. The unemployment rate remained very low in March at 3.5%. Even so, there are some signs that supply and demand in the labor market are coming back into better balance. The labor force participation rate has moved up in recent months, particularly for individuals aged 25 to 54 years. Nominal wage growth has shown some signs of easing, and job vacancies have declined so far this year. But overall, labor demand still substantially exceeds the supply of available workers. Inflation remains well above our longer run goal of 2%. Over the 12 months ending in March, total PCE prices rose 4.2%. Excluding the volatile food and energy categories, core PCE prices rose 4.6%. Inflation has moderated somewhat since the middle of last year. Nonetheless, inflation pressures continue to run high, and the process of getting inflation back down to 2% has a long way to go. Despite elevated inflation, longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. The Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people. My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. We are highly attentive to the risks that high inflation poses to both sides of our mandate, and we are strongly committed to returning inflation to our 2% objective. At today's meeting, the committee raised the target range for the federal funds rate by 1/4 percentage point, bringing the target range to 5 to 5.25%. And we're continuing the process of significantly reducing our securities holdings. With today's action, we have raised interest rates by 5 percentage points in a little more than a year. We are seeing the effects of our policy tightening on demand in the most interest rate sensitive sectors of the economy, particularly housing and investment. It will take time, however, for the full effects of monetary restraint to be realized, especially on inflation. In addition, the economy is likely to face further headwinds from tighter credit conditions. Credit conditions had already been tightening over the past year or so in response to our policy actions and a softer economic outlook. But the strains that emerged in the banking sector in early March appear to be resulting in even tighter credit conditions for households and businesses. In turn, these tighter credit conditions are likely to weigh on economic activity, hiring, and inflation. The extent of these effects remains uncertain. In light of these uncertain headwinds, along with monetary policy restraint we've put in place, our future policy actions will depend on how events unfold. In determining the extent to which additional policy firming may be appropriate to return inflation to 2% over time, the committee will take into account the cumulative tightening of monetary policy, the lags with which monetary policy affects economic activity and inflation, and economic and financial developments. We will make that determination meeting by meeting based on the totality of incoming data and their implications for the outlook for economic activity and inflation. And we are prepared to do more if greater monetary policy restraint is warranted. We remain committed to bringing inflation back down to our 2% goal and to keep our longer-term inflation expectations well anchored. Reducing inflation is likely to require a period of below-trend growth and some softening of labor market conditions. Restoring price stability is essential to set the stage for achieving maximum employment and stable prices over the longer run. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
Thanks, Gina.
Hi, Gina Smilik, New York Times. Thanks for taking our questions. I wonder if you could tell us whether we should read the statement today as a suggestion that the committee is prepared to pause interest rate increases in June. And I also wonder if the Fed staff has in any way revised their forecast for a mild recession from the March minutes. And if so, what a recession like what they're envisioning would look and feel like when it comes to, for example, the unemployment rate.
So taking your question, of course, today our decision was to raise the federal funds rate by 25 basis points. A decision on a pause was not made today. You will have noticed that in the statement from March, we had a sentence that said the committee anticipates that some additional policy firming may be appropriate. That sentence is not in the statement anymore. We took that out, and instead we're saying that in determining the extent to which additional policy firming may be appropriate to return inflation to 2% over time, the committee will take into account certain factors. So that's a meaningful change that we're no longer saying that we anticipate. And so we'll be driven by incoming data, meeting by meeting, and we'll approach that question at the June meeting. So the staff's forecast is so. Let me start by saying that that's not my own most likely case, which is really that the economy will continue to grow at a modest rate this year. And I think that's so different people in the committee have different forecasts. That's my own assessment of the most likely path. Staff produces its own forecast, and it's independent of the forecasts of the participants, which include the governors and the Reserve Bank presidents, of course. And we think this is a healthy thing, that the staff is writing down what they really think. They're not especially influenced by what the governors think, and vice versa. The governors are not taking what the staff says and just writing that down. So it's actually good that the staff and individual participants can have different perspectives. So broadly, the forecast was for a mild recession, and by that I would characterize as one in which the rise in unemployment is smaller than has been typical in modern era recessions. I wouldn't want to characterize the staff's forecast for this meeting. We'll leave that to the minutes, but broadly similar to that.
Rachel.
Thank you, Chair Powell. Rachel Siegel from the Washington Post. Thanks for taking our questions. I'm wondering if you can talk about the account of possible effects of a debt limit standoff. You've said repeatedly that the ceiling must be raised, but do you see any economics effects of even getting close to a default? And what type of situation would that look like? So
I wouldn't want to speculate specifically, but I will say this. these are fiscal policy matters for starters, and they're for Congress and the administration, for the elected parts of the government to deal with, and they're really consigned to them. From our standpoint, I would just say this: it's essential that the debt ceiling be raised in a timely way, so that the U.S. government can pay all of its bills when they're due. A failure to do that would be unprecedented. We'd be in uncharted territory, and the consequences to the U.S. economy would be highly uncertain and could be quite averse. So I'll just leave it there. We don't give advice to either side. We just would point out that it's very important that this be done. And the other point I'll make about that, though, is that no one should assume that the Fed can protect the economy from the potential, short and long-term effects of a failure to pay our bills on time. It would be so uncertain that it's just as important that we never get to a place where we're actually talking about or even having a situation where the U.S. government's not paying its bills.
And just to follow up, was discussion around the uncertainty of a possible standoff, did that affect today's monetary policy decision at all?
I wouldn't say that it did. It was, of course, it's something that came up. We talk a lot about risks to the outlook, and that come up. A number of people did raise that as a risk to the outlook. I wouldn't say that it was important in today's monetary policy decision yet.
Steve.
Chairman, oh, thank you. Yeah, Steve Leisman, CNBC. Can you tell us what the Federal Reserve Board did in the wake of that February presentation where you were informed that Silicon Valley Bank and other banks were experiencing interest rate risks? And can you tell me what supervisory actions you've done in the wake of the recent bank failures to make sure that banks are currently appropriately managing interest rate risk? And kind of part three, but it's all the same question here. Do you still think this separation principle, that monetary policy and supervision can be handled with different tools? Thank you.
Sure. So the February 14th presentation, I didn't remember it very well, but now, of course, I've gone back and looked at it very carefully. I did remember it. And what it was a general presentation. It was an informational briefing of the whole board, the entire board. I think all members were there. And it was about interest rate risk in the banks and lots of data. And there was one page on Silicon Valley Bank, which talked about, the amount of losses mark-to-market losses they had in their portfolio. There was nothing in it about, that I recall anyway, about the risk of a bank run. So it was, I think the takeaway was they were going away to do an assessment, a horizontal assessment of banks. It wasn't it wasn't presented as an urgent or alarming situation. It was presented as an informational, non-decisional kind of a thing. And I thought it was a good presentation. And as I said, did remember it. In terms of what we're doing, of course, I think banks themselves are many banks are now are attending to liquidity and taking opportunity now, really since the events of early March to build liquidity. You asked about the separation principle. Like so many things, it's very useful. But ultimately it has its limits. I mean, I think in this particular case, we have found that the monetary policy tools and the financial stability tools are not in conflict. They're working well together. We've used our financial stability tools to support banks through our lending facilities. And at the same time, we've been able to use our monetary policy tools to foster maximum employment and price stability.
Mr. Chairman, I'm sorry. I don't mean to be argumentative, but the staff report said SVB has significant interest rate risk. It said interest rate risk measurements failed at SVB, and it said banks with large unrealized losses face significant safety and soundness risk. Why was that not alarming?
Well, I mean, I didn't say it wasn't alarming. It was, they're pointing out something that they're working on and that they're on the case. That I'm not sure whether they mentioned. I think they did actually. They mentioned that they had taken regulatory action, or supervisory action in the form of matters requiring attention. So I think that was also in the presentation. I think it was to say, yes, this is a bank, and there are many other banks that are experiencing these things, and we're on the case.
Go to Victoria. Hi, Chair Powell. I wanted to ask you, obviously, with the recent bank turmoil, we've seen multiple banks buy other banks. And I was just curious whether you think that further consolidation in the banking sector would increase or decrease financial stability, and whether you have any concerns about the biggest bank in the U.S. Getting even larger.
So, we certainly don't, and I don't have an agenda to further consolidate banks. Consolidation has been a factor in the U.S. banking industry really since interstate banking, and before that even. It goes back more than 30 years. When I was in the government a while back, I think there were 14,000 banks. Now there are 4,000 and change. So that's going on. I personally have long felt that having small, medium, and large size banks is a great part of our banking system. The community banks serve particular customers very well. Regional banks serve very important purposes, and the various kinds of GSIBs do as well. So I think it's healthy to have a range of different kinds of banks doing different things. I think that's a positive thing. Is it a financial? So I would just say, in terms of JP Morgan buying First Republic, the FDIC really runs the process of closing and selling a closed bank completely. That is their role. So I really don't have a comment on that process. As you know, there's an exception to the deposit cap for a failing bank. So it was legitimate. And I think the FDIC, I believe, is bound by law to take the bid that is the least cost bid. So I would assume that's what they did.
So do you have any concerns about the fact that they're getting larger in general?
So I think it's probably good policy that
Ivan, I might want to cut in here.
Doing big acquisition.
I had a thought for you that I think may have been easily looked over here. Sorry to interrupt the thing. I think we got at least a good chunk of what he wanted to say out. We got the statement. We got some of the additional commentary. I wanted to point out something that he said that was really interesting. This came across my desk here. Federal Reserve raised the Fed funds rate by 25 basis points, marking the 10th increase and bringing borrowing costs to the highest since 2007. The central bank also signaled that it may be done with a tightening cycle by taking out from the statement a sentence that pointed out the need for additional policy firming. So it was a little one, but this sort of just took headlines here as we're speaking. It seems that, again, some people might be arguing or taking that stance that by taking out a sentence that pointed out the need for additional policy firming is possibly justifying some of the initial spikes that we saw back up on the S&P. Is it overly bullish? I don't know. It's a little fishing, in my opinion. The market is looking for some sort of directional bias here. I don't know. What's your take, Ivan? You were taking notes there. Commentary so far, what are you thinking?
I don't know.
Yeah, it didn't really have conclusive. I liked that the lady came out right away and said, does this mean anything for future rates? And he was like, oh, we haven't decided on that. And I was like, dang, okay.
Yeah, this is not that's one side of it that correctly that it's not a meeting that decides future rates, and we're gonna still be independent. So that's kind of okay, that's a bit interesting. And then they're talking about SVB, and the market is like, oh, everything is all right, nothing is wrong with the banking sector. We just consolidated some banks, and everything is all right. So that's that. Thank you for that, though. But in essence, I'm like, okay. Nothing to really grasp, nothing really this is a clear direction.
Yeah, we didn't really get that. I do think that was an interesting thing that they talked about redacting a statement, or Jerome Powell redacting a statement, pointing out the need for additional policy firming. That's very, very interesting that was picked up on. That kind of rushed right past me here when he mentioned it, but now listening back, I thought that was really interesting. I want to ask Frank in just a second what he thinks. We're going to drop it one more time. We dropped it earlier, guys. We're doing a $500 Bitcoin giveaway here this month. We're going to drop the link right here in the chat right now. If you guys want to join for the chance to win the $500, it's right below Ivan's head. Click that link. It's in the chat right now. Click that by clicking right here, and then just message one of us. Send a direct message if you want to join the giveaway. We're giving away $500 in Bitcoin. All you got to do to enter is message us right there. We got people on the other end who are going to get you into the giveaway. Again, all you got to do is send that message. And yeah, Frank, what's your take? Anything that stuck out to you, or was this kind of as confusing as it was for Ivan and I? What do you think?
It kind of sounded a little bit as expected, where he said, no decision on a pause yet, but at the same time, I guess what was a little unexpected was retracting that statement where he said a need for tightening policy. That still doesn't mean that they won't, but it's also saying that there's a chance that we can let the economy run its course and let inflation run its course. So there might not be a need to tighten anymore. But there's still no, concrete decision on a pause. So that's still, we're at the same spot we were weeks ago. Still at that mixed, confused sentiment. So we're just gonna have to see where the market bids it today.
Yeah, and here's your hourly view of the S&P 500. Shot up, now coming down. I mean, I'm going to be honest with you. I thought, like, at first it sounded somewhat relaxed. He said, things were going in the direction that they wanted, the redaction, and now a little bit of back and forth here. Candle, though, still pretty indecisive, not a strong move one way or the other. Perhaps there'll be some further commentary from him as we get going, which will sweep across the headlines again here.
Well, can I add one more thing?
Yeah, please.
I think, when he's talking about the economic data, it sounded a little bit mixed. Job openings were decreasing, but, things weren't looking as bad as they seem. So it's still mixed, but at the same time, good economic news if he was to lean more towards that, which he kind of sounded like he wasn't as concerned with the economy. The banks were the biggest, the regional banks were the biggest problem in the commentators' eyes. But for him, I think he's not too bearish on the economy, and in turn, I think that's a good sign for the dollar and strength and risk off.
That's a fair point. The commentary on the economy sounded very lax, sounded like, he wasn't too worried where things were. Jobs were slowing, like he kind of, so to your point, the economy showing some signs of, or staying strong gives the Fed more room to do its thing. But then also jobs slowing were mixed in the sense that, well, you also have jobs slowing, which is kind of one of the leaders of inflation, right? So, Ivan, you quoted someone saying me to shut up. Who told me to shut up? Where are we at?
Shut up.
I did. Okay. I don't even remember saying it. Things are moving too fast for me. Ivan, what's your take?
Things.
Ivan, I think you're making things up here.
I'll rewind. I will tell you tomorrow.
I'm redacting that statement. I'm redacting.
Yeah. Put it on A1 later.
Clip it. Ivan, what do you think? So jobs slowing, but economy's still strong. Where does that leave us? Any cues there?
Well, I just want to add one thing that actually slipped my mind, but I was looking at it and I kind of didn't pick it up. But the staff predicted a mild recession in general, but General Powell says his forecast is modest growth, not a recession. So that's more optimistic tones, I would say, from our old friend here. But in all, like, am I gonna buy euro dollar? Like, dollar is bearish forever now? No, it's still not clear.
Yeah, no, and I mean, to me, what this tells me is that it's seems to be business as usual, which means for me, it's not like, if I'm going to be bullish on the dollar, I would need some like more urgency the other direction. And for me to be super bearish the dollar, I'm not necessarily bearish at current levels, but on pullbacks, Ivan, we talked about this weeks ago, and we've continued to say this. The dollar has been trending lower. I wouldn't necessarily be a seller at the lows, but pullbacks continue to be interesting for me as this story sort of continues, where the inflation continues to dwindle. I think at some point we see pauses. At some point we get some evidence of that. But the question will be, how long will that be? And again, to Frank's point about the economy showing resiliency, and Ivan, what you just said, economy, possibly avoiding recession in Jerome Powell's eyes, or mentioning something softly like that, that gives room for more rate hikes if they decide to. But again, not a super conclusive statement, I would say. Still some mixed sentiment. The S&P 500 trading still here on the 4-hour chart, basically where it started on the beginning of this candle. So interesting to watch that.
I have a commentary.
Your commentary.
My head is clear. Are you ready?
I'm ready.
Dollar. I think we're just going to short dollar going forward. Because wait a minute. Isn't there ECB tomorrow?
ECB, yes, tomorrow.
Check out the euro. Yeah, and then we is there an FP on Friday?
Yep.
Did he drop out or did I drop out?
No, I'm here.
Okay. Is there NFP on Friday or next Friday?
There is. NFP is this Friday. We have ECB tomorrow.
So tons of fun more then.
Yes. The show continues. I hope you'll be right back in the seat with us, Ivan. You got to keep coming back. The crowd loves you. The crowd loves Frank. You guys are the trio now. You got to come back for the big events.
So I think the bigger theme here is that we are peaking interest rates overall, generally speaking. That's why dollar has fallen overall. And I think that's going to take the front seat again. Well, we have data coming out. We have NFP, we have ECB. We also have CPI coming out around 10th or 13th of the month. So until then, that's going to be my main, this is what we're going to talk about. CPI is generally peaking, and we are generally going to see the highest rates around. Now, Mark is actually pricing in a rate cut by September.
Yes, that's kind of been the case. We've been tracking that a little bit on the CBOE, the Fed site that you like, but also on our Fed tracker, same kind of data forecast to sort of see rate cuts. And you're saying as early as September of this year, which is sort of the consensus, which is, really interesting. We'll see if anything shocks the market, but yeah, it seems like consensus is dollar continued down, S&P potentially resilient. But I will say, and Frank and I have talked about this, many people are calling for, the market is sort of expecting that to occur. So any surprises to the downside for the SPY or sudden shocks to the dollar upside could be much larger, I would say, if there was something surprising. So my opinion, I'm with you, Ivan. I'm pretty much looking to sell dollar on the rips, and specifically buying things like gold on pullbacks, possibly the S&P. I might revisit that trade. So we'll continue to watch that going forward. Guys, we've been streaming for a long time. I think we might need a break here soon. Unless, Ivan, if you want to go solo, you're welcome to do it. If you want to take over for a little bit, you want to take over?
I can take over for a few minutes to bother people a bit, yeah.
Okay. Before I go, last call, guys, on the Bitcoin giveaway. We dropped the link a few times. Last time, I'm going to drop it here. Click this link, join the giveaway. Click that link and enter for a chance to win 500 BTC. We're giving that away. Frank, you're welcome to stay on with Ivan for a few minutes or tune out. I'm going to jump out and probably go take a nap for the next day.
Sounds good. I might join you.
All right, Ivan. You're flying solo, man.
All right, I'll take it.
Bye, Ivan.
All right.
Bye,
See ya.
Frank. Yeah. Well, as the site he was mentioning, as you can see, current rate is supposed to be 5, and by September it's going to be 4.75. And this one is apparently not updated by itself, but okay, fair enough, whatever. What I wanted to mention to you guys overall, so yes, we've had a meeting. We have generally a very bearish dollar, though it is range bound, and I just want to mention a couple of things to you. I have prepared somewhere here. Like the most important thing out of everything is CPI above everything. That is the key indicator. And I saw yesterday in stream that, oh, what is the most important thing? Or like, I don't understand how to read the economic calendar. CPI, Consumer Price Index, core. That's what they track. And then headline, which is just Consumer Price Index. That is what the news kind of look at. So there's two different ones. And then there is month of month and the year over year. Both of them are important. They should be, month of month should be 0.2 and year over year should be 2.5, give or take. And that is CPI. And then FP comes around on Friday. Should be around 150 to 200,000 new jobs for it to be like general steady growth. Because you have to look at the trend, and then you have to look at GDP. Or what was that supposed to be? 2.5. Unemployment rate supposed to be around 3.7, 8, 9, 4 maybe. Because right now it's 3.4 as far as I remember. Is a bit too constrained for them. And then every other indicator is, consumer confidence, it is PMIs, it is orders, it's housing, it is whatever down the line. Now, he mentioned a couple of things that the ones that really hurt the most by the higher interest rate was housing market and investment. Now, I'm a fundamental trader. I have an MBA. I have a master's degree in these economic things. So I understand it. But I want you to ask me any questions regarding this, especially how do I employ this to my trading? And the answer to that is as difficult as it is easy. Where CPI is going, it peaked around July last year. So it's not like it going. Now it's going a bit down, slowly down, I would say. And it's not fast enough. Okay, so what do you then do? What is the trend? The CPI is generally do fall. We have seen downturn in economic performance. As Powell said, we are seeing the turnaround in the economy. Then we are seeing the banks. Then we are seeing them being consolidated or being bought up as of this weekend by JP Morgan. And the case here is an undercurrent. Don't forget it. That whatever is happening in the market is there for a reason. And why does dollar peak all of a sudden? It is because we're seeing lower interest rate coming in, going 2, 3, 4 months down the line. And that's why I'm mentioning September, because how many months is it until September? 4. We are going to have no rate hike in June, no in July as of current. And it doesn't even seem like it unless CPI comes out around 13th of May as something dramatically, beautifully great high. But if so, we will take that then. And then you are asking yourself, okay, but Ivan, what about the stock market? What about dollar? What about USDN? What about all of those? I'm not predicting, but I'm saying dollar yen should, by most market analysts, says it's going to go down. Why would it go down much, you say? Because dollar is going to weaken either this month or next month, or when the market sees that they are peaking. That is way before Jerome Powell, and we all remember what it did when it comes to, it also is all temporarily, is transitionary, and then it wasn't anymore. This is going to happen again. That's their role. They have to be late on the gas pedal or late on the brake, because they have to see proof. We see it way earlier. That's why we can react upon it. So if you're wondering about me saying, usually yen should go higher, why? What is the future interest rates? What is the future interest rates of yen? What is the future interest rate of dollar? Dollar is supposed to peak. Yen, are they going to increase? They're getting better and better economic performance. They have inflation at 4%. They should have 2%. Mustang again is going to go bullish because they have an ultra loose policy, meaning they're just pumping money into buying bonds. But when dollar goes bearish, everything else magically goes higher, unless Japan has the same economic, which means they also have to peak. Generally, for most years I've been trading, except for like past 2 years, dollar and yen has always been strengthening and weakening together. Right now, they are completely two different planets. They don't move together. They actually move opposite. Therefore, there actually are some slight potential for profits on it. But I would argue to the downside. Is it currently bearish? No. And I don't know when I said it, but I said higher prices on USDN is great because I can sell it higher. Opportunistic mindset. We talk about this in our VIP webinars that we normally have Wednesdays and Fridays at London Open, and sometimes also at New York Close around half an hour from now. Is that you have to see the opportunity. With the longer time you take from going away from being annoyed, frustrated, angry at yourself, the market, whatever the reasons that you have, the longer time it's going to take you, and that's going to take a bit of time for you to become profitable. Meaning, you have 100%. Given that you have 100% space in your brain for thoughts in itself, and if they are majorly negative or majorly non-development, I would say, in my opinion, not expert in that sense, but in my experience, I need to get over it, get moving, stop crying, stop whatever I'm doing, because that actually takes away what I need to do, which is looking for opportunities. That's what's going to make me money. That's what's going to make my bank account grow. That's why I'm here. Because if you're here to cry, that's okay. That's all right. I do that too. But that's not the point if you are going to be objective, rule-based, realistic in your approach, in your professional approach to the market. And we can buy Nasdaq and pound yen? Sure. If you want to do that. Hi, do you guys open trades minutes before the event time? Nope. I'm just trying to understand something. No, I do not. I would what do you call it in English? I would maybe buy if this was a very clear market, and that's why I'm here. I'm here to trade. I'm not here to sleep around and be like, hey, what is going on, bro? You get boop. No, I'm here to trade. So right now, for me as a trader, who's been doing this for 9 years, I don't see an opportunity. That doesn't mean that you don't. Maybe what you do, because it all depends on what I have done previously. And in my system, buying higher highs never made it the gold medal in my trading system. So you might have a different one. I'm not going to argue about that. But what I do see here is Australian dollar coming down, euro dollar coming down. Is that a pullback to buy? No. Why? Why Australian dollar is not a pullback to buy? Because we're currently at resistance. We're currently at a support which is very local. But I would argue that 66.20 even is a better support than we currently have. Because once you're thinking about, okay, how do we like the market to be? Wishful thinking. What is like the most beautiful market you ever out there? Is it is it round? Is it short? Is it quick? What is it? What is the reversal you want to see? This reversal is okay. Fair enough. Okay, I can take that. But this pause here with a lack of a higher high, and then even breaking this highest here, I'm like, either there's a range or indecisiveness here, or this is actually going to go downtown. Why would I say such things? Because in my experience, when this one doesn't get respected enough, I'll have to look at the next support, which is all the way down to 66.20. And that's just because I have tried to buy this so many times until the market says, Ivan, you are so funny, but you're wrong. What broker do you use? I use IC markets. No, Blue Bay markets. Sorry. I blew my lunch money for school and never trading FOMC. I lost 20 pounds from trading. First of all, second of all, third of all. Never trade money you cannot afford to lose. Nothing in this term is construed as financial advice. Also, hello. Okay, fine. Now, why did you do that? Now you've learned. Take that as a lesson. And then you can come back and say to all those other people who do that every single time that blew my account, blew my account, blew my account on NFP, on CPI, on GDP, or whatever. It doesn't really matter, because what are you actually focusing on? Are you having a professional approach to it? Do you have profitability? Do you have statistics? Do you have done this many times, experience that every time I do FOMC, I make money? Or is it like random? Because if it is random, is this random as okay, which grass straw is going to grow fastest today? Who knows? Unless you start actually digging into the material and start analyzing and starting to evaluate and starting to see the different performances. This isn't a fun game. You are up against the world's best trader. You're against the world's best PhD, whatever you call them, psychologists, traders, economists, coders. Also, if you're going to win the game, you need to add value. And what is your value to it? It's your brain. It's your analysis. It is your take on the market. And you need to have done that so many times that you know it's profitable. Even though this trade right now, Australian dollar, US dollar, I know if I'm going to be a buyer here, I can only do one thing, bro. Buy at support. The only thing that works for me. Only thing that works for me. If I buy high, I've tried to buy here, by the way, before. That went down the drain. Now, if I'm going to go to Euro New Zealand as Ollie asks for, and you're wondering to yourself, hey, what do we do here, bro? We're buying higher highs and higher lows. So if this breaks 77.50, which I said 77, was it 50 earlier? Because it got triggered earlier today. If this makes a new higher high now, I'm going to buy that thing back up because I can get back my money because I lost a lot of money and I don't want to tell you what, but hey, we did so. So this one is purely bullish in my eyes. If this falls down below 70, take away my lines. If this breaks below this one here, I am gonna raise the flag. I'm gonna. Is it white? Like I'm gonna look. I don't have a flag though, but maybe my cap will be like. I will wave in defeat, like Jack Sparrow. Anyways, given that random trades are deadly, and I've tried my fair share of higher highs and bad trades, by the way, and don't necessarily I still do them. Maybe I still do them. But what I did, okay, there's many things that I did, but one thing I did do is I previously would buy here. Oh, that looks like support. Or I would buy like there. Oh, that looks like support. But every single time, it got to stop me out here. 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 And I'm like, what am I doing wrong, bro? The only thing I'm going to tell you guys is just whatever you do is systematical. And if I go through your trades, which I do regularly for free, by the way, if you want me to go through your trading history, I'll do it free of charge. Don't you worry about it, because I learned so much about you. And you know what I find? I haven't found that lately though, but I have found many times that people would sell there, right? And you're wondering, but Ivan, I didn't do that. You are gonna be shocked to how many do that. I see that from time to time again. And I'm like, dude, what did you do? And he's like, well, I thought you were going to go lower. Yeah, I cry a bit. That's what I cry about, because no, bro, there's no sell there, bro. The sell is here. There's your sell. Somewhere up here. Or if you're sending on a bearish trend, at least make sure that you're not going to sell counter trends. That also works. So my point here is I'm going to buy the pullback probably tomorrow morning. So you're going to probably find me alive or something tomorrow, and I'm going to look for that. If that doesn't work out, then Jesus said no. Australian dollar, New Zealand dollar, same thing. Yeah, okay, maybe the same thing there. New Zealand CAD. If that just makes a new low and reverses around, I'm gonna sell that thing because I want my money back. You know what? That is the worst thing you can do. Revenge trading is gonna kill your account. But this is a treat I'm looking for. But I don't have revenge, bro. I'm waiting like a cut or like a lion in the savannah, in the bush. I'm waiting for the market to turn around, and if it doesn't happen, I'm gonna be like a lizard, being baked in the sun on the roof, and I'd be like having a pina colada or like a little drink on the side, and be like, life is great. Because right now it hit my stop loss yesterday at 84.30, give or take, and I have nothing to do other than waiting patient and talking fun with you. But that's what I'm looking forward. Euro New Zealand is what I'm looking forward to. Australian dollar, New Zealand dollar. Maybe if it makes a new higher high, I can maybe scalp with a stop loss below there. What else should I do? What else did you guys ask about? CAD Swiss C. If you want me to do any trade patterns, hazards, then you can mention them now. What do you say, bro? Buy support? No. No. Hear me out. There is your buy. There is your buy. There is your stop loss. There is your stop loss. If this is going to do that, it has to do that. It has to turn around. It has to break above that high. That's the only way you can buy this one, bro. It is as bearish as it can be. How do you have so much energy? I bought this nice cup and I fill it with something extra. And yeah, cheers. Netflix top trailer. I do call Diamond FX. If you Google that name there, search on YouTube or the link that is. It killed me these 2 weeks. I hate revenge trading. Yeah, and I'm a mentor, by the way. I have a mentorship program at diamondfx.com, and if you use YT, you can probably get 20% off. But besides the point, my point is I know exactly what you guys are going through. I'm not a saint. I just lost a whole ton of money today or yesterday or the past days, but I'm still here having fun, right? I have been trading for 9 years, lost most of it. I've done binary options, bot trading, account management, or people traded my money. Lost money left, right, and center, and done everything under the sun, and I've done all the mistakes. I've started with $30 account. Like everything is out there if you want to look into it. But the point is, I am no better. I'm no different. I have just taught myself through horrible trading that I shouldn't do that. That's why I can easily just identify CAD-SWISS as bearish. I don't want to trade. I want to buy it. But should I buy USDN? Absolutely not, bro. I just mentioned a bit earlier about USDN. Yeah, by the way, use that link. So for me, no. It's a no, because I am fundamentally bearish on it. Because of dollar weakness coming in, and if it goes higher, then okay, cool. But then I would rather buy euro yen instead of buying USD yen. You can probably laughing my. I love the pitch. Yeah, you're welcome, Bishop. You're a Swizzy, Alda. All right. Where are we? And I hope that I am not scaring anyone away in terms of my jokes or my humor or whatever, because I want everyone to enjoy this. Meaning, I never had a mentor. I never had. Well, I have looked at YouTube videos for crying out loud, but nobody really held my hand, right? So I spent 3 years becoming profitable on my own. 1 year of it is binary, horrible things, patterns, horrible things, 1 minute strategy, horrible things, or might work for you, bro, or for those who do it, but it never worked for me, and I can't proclaim anything that didn't work for me, and I stand by that. And I found my little thing, and then my little thing may work for you, may not work for you, but the most important thing for you is to have your mindset correctly. And I spent so many times, I spent so many hours on it every single day. People are like, I don't know what to do, I don't know what to look for. Okay, fine, I'll make a document for you on that. That's okay. But how are you? How's your trading going? Like, are you doing revenge trading? And they're like, yeah, we did some revenge trading. The emotion trading, yeah. I increased my stop loss and I made lose more than I used to. I had a $300 trading account and I lost 100 on it today, so 30%. That's a lot. That's a lot. So I feel like I don't really do well in trading right now. And I turned it around every single day and be like, okay, so what can you do about it? Okay, you can backtest. You can trade scenarios that has done well to you and creating positive experiences that you actually can analyze the market. You can see that your Swissy here is pretty range bound. Has made a lower lows, maybe a 99.99 would have been a good sell. We're not really there. If you think of buying, it didn't really make a new high. It made a new higher, but it never continued on. So a bullish buy and a buying here is a horrible idea. 10 out of 10 times loses stop losses. And then you go to the next market and you're looking at then you can look at, for example, British pound, US dollar to the upside, and you're thinking, okay, this is bullish, but where were you at 17th of April, 21st of April, 25th of April, and 2nd of May? Why didn't you buy then? Now the guilt comes out, and then you're thinking, well, I should have done it, and I didn't do it, and I was scared, and I was afraid. I think it's going to go lower. Okay, cool. Okay, what's your plan for tomorrow then? Oh, I think it's going to go higher. Okay, cool, good. Maybe it will do that. If this ends high on Friday, what is your number one job on Monday? Wait for the pullback. As deep as you can get it, but still catch it. That is your most important job. And you can see here, really deep pullbacks. There isn't a reason to be aggressively bullish here. But upside is all right. Why is British pound US dollar bullish? Because we have seen higher highs and higher lows. We have 10% inflation in the UK. We have 5 or whatever it is in America, is gradually lower, and yeah, that looks out to be a bullish fundamental buys. ECP slim and squeezy. Oh, what about retail sales? Doesn't matter. Message there to join the $500 Bitcoin giveaway, by the way, people. Just so you can get a part of YouTube. Who doesn't want $500 in Bitcoin? I would. But I'd rather you guys win it. And by the way, my pride and joy is you winning. And that's not really a pitch. That comes from so deep and so deep and so deep inside me that you wouldn't believe how deep that is. Because of all the things that I've ever experienced in this trading market, if I can just see someone being happy about it, if I can just see someone believing in themselves, and if I can just see somebody somebody out there being like, I can actually do it. And it was actually because of Ivan. Then I forever will be way more glad than $10,000 in my bank account. CAD, yeah. Coming hard down. It is definitely gonna go down to 98 before it hits any kind of somehow support zone, maybe. So it's definitely bearish so far until it starts making higher highs. And right now, in my essence, this is a take profit thing, and that's just going to continue on until it finds the bottom. It's very difficult to find a bottom on take profit moves like this one, for example. And this one is even steeper than this one. So until it breaks higher and makes a higher high and higher low, maybe it breaks 100, it's bearish on that. Gold. Oh, yeah. So I think I did well on that one, Elda. I think I explained that well to you. Gold. Okay, we can do gold. 2 minutes here. Okay, it's high. Okay, cool. Did you buy it there? Sorry, one. Did you buy it there today? Totally yours. Did you buy it there? Nope. Do you continue to wait for it to do that? Yeah. Does it go all the way down there? Definitely a possibility. That's why you have a stop loss. Okay. It's easy to trade. But once you start adding those emotions in it, the whole thing becomes very muddy, difficult, hard. Oh, I can't do it. I don't want to do it. I can't do it. I don't want to do it. I was looking at Euro yen. Yeah. Euro yen from... Somebody asked about facial expression. That is the utter disappointment I'm going to give my kids when I'm like, how? Also, you had one job was to go higher. One job. Elda, they're probably going to be a link there in 2 seconds there, yeah. I have an FX. There's my link. Yeah. Where was I? Euro yen. Yeah. So I guess it's not bullish anymore then, bro. So what do I become now? Then I become very passive. I can go a week without looking at this one. Well, a couple of days. So what I normally want you to do, I want you to check the markets around this time of the night. For me, it's night. It's 22:30 p.m. So London, New York close. Look for setup for London. That's my entire thing if you're going to day trade. And the other thing is from Friday, Sunday, give or take between that, Thursday, Friday, Saturday, Sunday. That's when you look for setups for the week. Easy peasy lemon squeeze. Don't make it so difficult. Are you going to sit at the charge every single day wondering when you're going to do? No. What you're going to do, you're going to join the live, the VIP webinars, the mentorship lives we do for half an hour, 45 minutes, give or take, with some laughter and some joys and some hard talks and hard truths, and they're gonna do something else. Half of trading is doing something else, unless you're looking for education. That's a completely different thing. But looking for trades, 10 minutes, 30 minutes max per market open. What's your favorite pattern trades? Double bottom, higher highs and higher lows. Can I just check my own trades now? Because I'm being so grateful to you. Oh. Oh. I just saw Euro yen going down. I'm like, what about Euro New Zealand? What about Euro New Zealand? I still have some buys there. And I'm like, oh, it went higher. Finnick Q. How do you prevent yourself from over trading? The easy peasy lemon squeezy. How do you prevent yourself from overeating? Hopefully you have some kind of you feel full at some point. I prevent myself from over trading by knowing the absolute horrible consequences that it is of um, trading or too much. I know it's going to take us from 1,000 pips in profit to 0 or below, and I just know the horror. It's just inbuilt. I've just done it so many times that it's just inbuilt. So it comes down to experience, basically. And over trading is because you think it's okay. The consequences are okay. You can take the consequences. Oh, it's higher high. It doesn't really matter, does it? Because you're just going to go higher. Everything is going to be all right. Nobody thinks that way. Only you think that way. And it's a limiting mindset because you're not looking for the best possible opportunity. You're thinking, "Oh, this looks great," and then you forget what you're supposed to do as a trader. And then how do you prevent that? First of all, so first answer is pain. How much pain do you remember of how it was last time? And I find it horrible. Crying in bed for 3 days is kind of like something you remember. Secondly, I know what to do as a trader. I know what a successful trader do, and I know what success is in my trading. I know where to buy and have the knowledge. I don't second guess the market. So it comes down to finding that piece. It coming to understand that you need to believe yourself. And if you start doing pullbacks and you say I'm going to buy now, but you put a limit order on a buy on your stop loss instead of your actual entry. I found that to be, at the beginning, I had a lot of stop losses. And then I just put a pullback on, still limit order, going to bed, smack the next morning, spot on entry, already profit the next day. And that's how I realized that I don't need to buy the higher highs. I don't need to buy whenever I feel like it, because if I just wait for London Open or wait for the pullback or wait for deeper prices, I will get it. So I was rewarded by, I was having positive experience and being rewarded by waiting. And I think that's the only way I can stop over trading. What is the lag of COT data a week? 3 or 4 days. If the institutionals are long euro, for example, is it based upon data from yesterday? No, it's from Tuesday. So every Friday is posted from Tuesday. So it was collected yesterday, the COT data, and it's being posted on Friday, 2:30 p.m. What do you think about British pound, Japanese yen? I think I just said I wanted to be bullish, but I'm not going to buy that pullback or that fall, bro. That's a nope in my book. Meaning, if I'm going to have a pullback here, I need to hold that one. I need to be soft, nice. This can dry up, by the way, but I need to be way different, because if this one looks like it's going to threaten that, I'm out. So yeah. What is my favorite pattern? I'm actually going to go back to that one from a moment, and I'm going to show you what I normally did this year. Last year, sorry, my bad. English and Norwegian not the same thing all the times. Yeah, I think mentioned that earlier. So this low in August, mostly around 20th, which wasn't this year, but that low there, as long as it holds, I'm gonna buy the living life out of it. If it's not a double bottom or triple bottom or whatever that bottom is that was made over here, this is the pullback to that low, and you can just, I'm gonna have a limit order like that next year. Oh, sorry, this year, sorry. And what generally tend to happen is that the yen pairs just go boom. I'm not gonna say it's gonna happen this year, but last year was fantastic. That's how I made 60% last year. Safe. Sorry, that was a new comment. Sorry, Carlos. Have you done New Zealand dollar, Canadian dollar? 2 seconds, I will do so. My absolutely lovely friend. Okay, yeah, okay, maybe. I like it. I like it. It's not great enough yet, but if this one holds, makes a new low, comes back up again, that's number one. And then I need to see number 1. Number 2 is always the best. Then I will sell that. So if that works out, that would be great. So it is looking schmeck. That's all from me. Today, FOMC was a bit nothing really conclusive, but no rate pause yet. Market has priced in rate cut by September. We did hike 25 basis points today, but still going to be data dependent and all of that. So I am going to be dollar bearish for the forthgoing. I'm going to be bearish on the yen, not on New Zealand, sorry. And I'm going to be bearish on yen, meaning I'm going to buy New Zealand yen pairs, but they are currently falling, so I'm not going to do that. Until next time, you're going to find me on FX on YouTube. I'm going to find me probably tomorrow as well here. So, boom. Love your family. See you.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. And remember, if you open a $1,000 or more trading account with 8cap, you'll receive a free copy of the Edge Finder. Click the link in the description below to find out more. From all of us at A1 Trading, have a great day, and we'll see you next time.